Problem 3, this is exercise 8.7 in your text, takes us a little deeper into the weeds with regard to stock transactions, but you'll be fine. Here we have two kinds of stock. We have common and preferred. And the only thing you really need to know about preferred stock is that they get their dividends first. They also have to be listed first on the balance sheet. Now, you could try to remember and memorize that. It's not that much. But just use a little common sense. If you have two things, one's called common and one's called preferred, which one are you going to list first? Preferred, I believe. Okay, so let's take a look. This company was organized. That means they got permission from the state that they were in to exist June 5th. They were authorized to issue, and you remember that means sell, 300,000 shares of $10 common stock. And they were also authorized, permitted to sell 50,000 shares of 5% cumulative Class A preferred stock. The Class A stock had a stated value of $50 per share. That's really just another word for par value. They wanted you to see that so you know that when you see it, you don't freak. You just say stated value, par value, nah, no big deal. So, they want us to go through and figure out what happened, and I suggest we do it on one of these guys first, and then we'll transfer it to a formal shareholders equity section. So the first one is they issued 15,000 shares of common stock for $12 per share. So that's transaction 1. So they sold 15,000 shares at $12 a share. That's 180,000. The par value I believe was $10 a share. So the additional paid in capital was $30,000. So on transaction 1, we received $180,000. 50,000 of it, $150,000 of it was common stock. 30,000 was paid in capital in excess of par or additional paid in capital. Then the next transaction, they sold 5,000 shares of the Class A preferred stock. It's $50 a share. They sold it for $51 a share. Okay, we can do this. So it's how many shares? 5,000 shares. 5,000 shares at $50 per share. Okay. And 5,000 shares at the $51 a share. I just have them backwards. I flipped them, sorry. So 250 is that par. 255 was the selling price. And the $5,000 difference is the additional paid in capital. I just wrote the numbers upside down, that's all. same difference. So cash received is $255,000. The preferred stock at par, $250,000. Damn those zeros. And the paid in capital in excess of par is $5,000. And the last thing we did was we issued 60,000 shares at $15 per share. So I'll try to do this in the correct spot. So this is transaction number 3. Let me get a different color pen. So in this one we sold how many shares? 60,000 at $15. So we sold 60,000 shares at $15 a share. That's $900,000. The par value for those shares for that 60,000 is $10 per share. The difference between those is the additional paid in capital in excess of par of $300,000. So we got $900,000. 600 of that is the common stock at par. 300 is additional paid in capital common stock. Now I'll show you why I wanted to do it on this table. Just makes it easier. We just add these up. So cash received, $1,335,000. Common stock, $750,000. Additional paid in capital common stock, $330,000. Preferred stock, $250,000. And paid in capital in excess on preferred stock is $5,000. We're now going to use these numbers to create a formal equity section of a balance sheet. And it looks just like that. So, the preferred stock, we have how many shares? They told us so we have 50,000 shares. Stated value $50. Class A, we sold how many shares? 5,000 shares. I'm sorry. They want the 50,000 down here, and they want the 5% up there. Whatever. And we were authorized to sell 50,000. We sold 5,000. So going back to our table, the one I just moved, sorry. We're going to come pick up our preferred stock first of 250,000. You see where that number came from. And then we're going to list the information about our common stock. It has a par value of $10. So we have $10 par. We have how many shares authorized? 300,000 shares authorized. Didn't mean we sold them. And of those 300,000, we sold 15,000 and 60,000, so 75,000 shares. issued and outstanding. And from the common stock, we raised a total of $750,000. You see where that number came from? Common stock, $750. Now the paid-in capital in excess of stated value of the preferred stock is just $5,000. The paid-in excess of the common stock is $330,000. I need a zero on there. So our total paid-in capital is those added together, okay, which is the total of the total cash, because that's all we did. That's $1,335,000. We had no retained earnings. Again, this is one of those odd companies that sold stock and did nothing. So the total shareholders' equity is $1,335,000. That's about as deep in the weeds as I'll ever take you with regard to stock.